Good morning, everyone. This is Windsor Brokers live daily market outlook for Friday, 10th of May 2013. The rather quiet overnight session and beginning of the European after yesterday's roller coaster markets, when the top performer and star performer of yesterday's trading, dollar yen, eventually broke above psychological 100 level, and overnight extension was seen above the next barrier at 101. Generally, much stronger dollar across the board and against most of its major counterparts was triggered by stronger and higher US yields that peaked at 1.8% yesterday. This was in past, I would say, 1 week or so, with also comments from Fed about possible ending of quantitative easing in this by the end of this year. And the spark for the yesterday's rally was after release of quite optimistic and supportive U.S. jobless claims data. That we know that job sector in the States is still the most painful point for the further recovery of the economy, and the quite optimistic release was just spark for yesterday's strong rally. That has pushed the dollar significantly higher against major currencies, with top performer being dollar yen, and from the other side, top loser was Aussie dollar. That is heading for the largest weekly loss in past year, as the price lost its important supports and the range floor at 101.14, 101.00, and extended much lower. We're going to see more about this in our technical part. Just briefly to say that at the beginning of European session, now euro is heading lower again along with the sterling. Euro is looking for test of psychological 130 support, while cable is eyeing the 154.10, 154.00 pivotal point. Now dollar yen is heading higher, 101.24 seen so far. We have 101.43 and 101.65 levels last time seen in 2009 and 2005 respectively. Dollar Swiss higher, well above 95 barrier, currently at 95.42. Aussie dollar 1.0040 at the moment. Focus at the parity level. From the commodities, crude oil currently at 95, 96, rather sideways mode seen on the lower time frame chart, with the consolidation, basically the freshly established range during the beginning of the week is still in play, and the directionless trading is seen for the crude oil, while the gold remains under pressure after yesterday's upside rejection at 1476, with this low so far seen at 1452, and again more pressure towards the downside according to the negative technical outlook. And of course we are going to go through each instrument later on and see the technical outlook for today. Yes, today is the last day of the week. Probably some profit taking cannot be ruled out at this point, but so far most of instruments are following and extending their freshly established directions, with the euro seen heading towards said 130, and the more significant is 129.50 near-term range floor, break of which is basically to give us a fresh direction for the single currency. From today's economic indicators, we have the release of what we had already. Economy watchers sentiment for April from Japan came at 56.5, quite disappointing compared to 59.2 forecast, and the March's release at 57.3. German trade balance trade surplus of 17.6 billion in March, higher than February's release at 17.1 billion, though a bit below 18.1 billion surplus forecast. Sees potential for further sees basically initial signal of further recovery of the German economy. From the other releases due to come, UK's trade balance is due at 8:30 GMT, slightly narrowing gap seen on the forecast for today, which is minus 8.9 billion sterling compared to February's minus 9.4 billion trade gap. From United States, no releases except a few speakers. Among them is the Chief Bernanke due at 12:30 GMT, and we are going to closely watch what he's going to say if there is something new to tell us. From Canada, we have jobs data. Employment change for April due at 12:30 is showing adding 13,500 new jobs compared to draw of 54,500 jobs in April, while unemployment rate is expected to stay unchanged at 7.2%. Just a small mistake was made in the presentation. At 1800 we have the federal budget balance from United States for April that shows 93.9 billion in plus compared to the minus 106.5 billion seen in the month of March. And these are the highlights of the economic indicators for today, Friday 10th of May 2013. More action again is expected today, continuation of yesterday's strong movements, but again we have to consider that possible profit taking may limit the recent gains or losses depending on the direction of the instrument. From the technical part, we're going to start with Euro as always. Okay, you can see the chart. So basically the pair fell from yesterday's, 2 days ago high at 131.93, following pullback that accelerated on a loss of 131 support, initially falling to 130.09, then brief consolidation followed during the Asian session, being capped broadly above, below 130.50 level, and now fresh acceleration lower than approaches a psychological 130.00 support. We can see it, I think, better on the 4-hour chart, where we have the attack at 130.00 as psychological support that may open way down towards our next targets. Support, dynamic support is standing at 129.81 this morning. This is 200 days moving average, and then we have the range floor, which is low of 24th of April at 129.53. The price is still, as shown on the daily chart, entrenched within this range. This is that has been established since mid-April. And yesterday's fresh fall now shifted the focus towards the lower boundaries of the range. As said, we have 130.00, 129.81, and 129.53, break of which is to give us fresh direction and confirm tops at 132, 132.41, basically to signal an end of the corrective action from double bottom at 127.44.50. Break below, as set, opens 129.81, 129.50, and then we have the psychological support at 129.00. On the upside, as the corrective action was limited at 130.50, not much so far to be expected at this point. As the market is still moving, we can see the brief look at the levels. 131 is quite strong resistance, 131, 131.11 yesterday's intraday high, and also close to 50% retracement of the entire fall, and any stronger rally should ideally be capped under this level in order to keep the freshly established negative tone. However, break below the range floor is required to give us direction, otherwise any bounce higher would keep the euro-dollar's price in range. But near-term structure is negative, and studies on the lower time frames hold the negative tone. Though overextended, the conditions might signal some corrective action that so far seems to be limited and not having stronger impact on the current pair's performance. A similar situation is with the British pound, as the pair accelerated on yesterday's upside rejection at levels approximately 155.90, left double top at these points, and they slumped lower on two-legged descent down to initially 154.23, and now the brief corrective consolidative action, I would say rather to 154.50 zone was all seen during the Asian session, again capped by descending 10 days moving average, and now fresh attack to the lower levels hits 154.16 so far. We have quite significant support and the break point at 154.10 zone. Previous high of 11th of April, 154.10, and the 50% retracement of the up leg from 151.95 to 156.03, a break of which is to confirm the double top, triple top, I would say, at 156 zone, and the open way for a deeper reversal and the stronger correction of the larger rally from 148.30 low of 12th of March 2013. That was so far capped at 156 zone with immediate support on the break below 154. Support seen at 153.33. That marks the bull trend line drawn of 148.30, and the break here is set to open next significant support and higher platform at 151.95. These are the lows of 22nd and 23rd of April 2013. Conversely, on the upside, the initial resistance that so far capped the upside stands at 154.56, while any stronger bounce should ideally stay capped somewhere under 155. That marks approximately midpoint of the entire fall lower. With the fifth leg now being underway, we can expect extension below 154.10, 154.00 as a negative tone continues to dominate on the lower time frames, as well as daily studies that are now losing traction and starting to point lower. Of course, confirmation requires break below minimum 153.33, which is trendline support, in order to confirm reversal. Yesterday's star performer was dollar yen, as the price skyrocketed after breaking above initial barriers 99.44, then previous highs between 99.74 and 99.93, and finally cleared the psychological 100 resistance. As we can see, the strong rally so far unobstructed, just brief correction consolidations come between fresh legs higher as the pair again advances the beginning of European session. So far 101.36, approaching our initial target at 101.43, which is the high of April 2009. We can see it somewhere on the larger picture. 101.43 is the April 2009 high, and this is our initial target. And then we have 101.65 low of January 2005, ahead of 102 as round figure resistance. The strong rally, as shown on the larger picture, that commenced from 2012 low at 77.12. This is in September 2012. So far remains unobstructed and continues to head higher after the pair broke above 50% retracement of the entire fall from 124.14 down to 75.55, which is the record low of dollar yen posted in 2011. Shows more potential towards the upside, and sees potential for extension through our initial targets at 101.4365 and the break above 102 as102 resistance. On the downside, immediate supports stand at 101.80 approximately, with any stronger reversal that is seen quite unlikely at this point, expected to be contained somewhere above 100. Previous strong resistance now acting as strong support, and should contain any stronger corrective action. As said again, this is quite unlikely for some deeper pullback to be seen at this point, as cross has commenced a fresh bull leg and a fresh phase higher. That should not be interrupted by any stronger pullbacks for now. From the other side, the top loser of yesterday's trading was the Aussie dollar, as the price initial corrective action seen yesterday off base at 101.54 has lost pace and lost traction at 102.53, though they break above initial resistances at 102.00, 102.20 was promising some more upside action. However, fresh weakness commenced from 102.53 high, and accelerated losses basically on a break below the platform at 101.54. Sharp fall lower through initial supports, and the strong supports where we had the 101.14 that marks the multi-month range floor. This is the low of March 2013. Multi-month range floor. The range has been established in August 2012 and kept the price entrenched within 101.14, 106.23 range since then. Now break below these levels, as well as break below 101 psychological support, and the 50% retracement of the rally from May 2012 low at 95.79 to 2012 peak of 106.23 posted in September sees basically opens fresh bearish phase, and sees potential for further extension lower, where we have immediate target at 99.70. Pardon, we have the immediate target at parity level at $1, and then comes 99.78, 61.8% retracement of the entire rally. From the other side, levels to be watched on the further extension lower. Initial before the parity level, I do apologize, we have initial support at 10016 that marks 100% Fibonacci expansion of the third wave that commenced from 103.83, and this wave could extend down towards 98.76 that marks 138.2% Fibonacci expansion of the wave from 103.83. Of course, break below parity level, and the next supports is seen required in order to resume. But so far, the configuration of the near term and larger picture studies sees more potential towards the downside, though the overextended conditions suggest that some corrective consolidative action cannot be ruled out at this point, with initial resistance overnight's high at just close to 101 barrier, and the previous lower platform, pardon, at 101.50 zone expected to limit any stronger action higher in order to keep bears fully in play. And that's all interesting from currencies. Let's take a look at commodities. Not interesting situation in the crude oil, as the price is flat within the range of 94.85 on the downside, and approximately 96.75 on the upside. The sideways movements consolidating a recent rally from the leg higher from 90.10 low of 1st of May. That peaked at 97.12, but still positive tone persists on the 4-hour chart, and sees more potential towards the upside, as the near-term price action remains supported by 20 days moving average, and the holding above initial strong support at 94.66, which is the previous high, and it's also reinforced by ascending 55 days moving average. On the hourly chart, pardon, neutral tone dominates here, and we see no direction at this point, as the price hovers around all three moving averages, 10, 20, and the 55 days moving average, that are basically at one level currently, and they're showing no direction, while daily structure maintains a bullish tone and sees potential for further extension higher. However, break above main bear trend line that currently stands at 96.66 is required to confirm the bullish resumption and open their way towards the next barrier, 97.68, high of 1st of April, and the next another important one is 98.63, peak of 13th of February 2013. And finally, we're going to take a look at yellow metal that again weakened on yesterday's stronger dollar, and again keeps the focus more towards the downside. Just a brief look at the larger picture for our show, still range being intact. We're talking about range of 1440 and 1487, with the price being entrenched within these levels since end of April, and showing no direction at this point. Downside remains well protected at 1440 as a renewed attempt lower seen on 7th of May left again low at the same level of the previous one, which was posted on 1st of May 2013, but subsequent bounce higher failed to regain important 1485, 1487 levels, and fresh weakness now looks for a possible test of 1450 and extension down towards 1440 as the price again accelerates lower after brief corrective action being capped at approximately 1462. Negative tone is seen on the hourly chart, and still sees downside at risk. Immediate support is 1452, which is the low of this morning, the session's low posted during the Asian session. And then we have 1449, 76.4% of the recovery rally from 1441 to 1476, break of which to open way down towards a strong support and the range floor at 1440. Now more interesting is to see in case of a break below 1440, this will confirm the end of the corrective action commenced from 1321 low of 16th of April, and allow for a deeper reversal of the entire fall of entire rally of 1321 that peaked, as said, at 1487. I'm trying to find the most proper chart to see the levels so we can watch in case of a break lower. 1434 is seen, 1424 is the 38.2% retracement and seen as the next target ahead of strong support at 1404 that marks 50% retracement, and also the low and the higher platform posted on end of April 2013. Of course, a break below 1440 is required to define the fresh direction of the yellow metals price. Until then, we'll be still talking about range trading, with the current structure being negatively aligned and seeing more focus towards the downside, while upside barriers at 1476.79 and the more significant 1485.87 stay intact. Upside break, of course, is required to open way for stronger recovery towards 1500 psychological and 1520 zone, previous critical support. That looks at the near term quite unlikely, as I said, the near term price action is still negatively aligned. And this is, I think, enough for me. I see we have some questions. Okay, Dow Jones is the first one, so let's just have a quick look. Dow Jones, the chart, one second. The chart speaks on its own. We can see that the price broke above 15,100 this morning, and sees unobstructed bullish structure that heads higher. We are talking about some upside projections. I think you can see the chart. Okay, strong uptrend is seen, and we have the good supports, let's say at approximately 14,880 and 14,820 that should contain any stronger pullback. So far, bulls are firmly in play and are heading higher with the. I don't have. Levels to see at this point, expansion levels I think you can find all the levels in our website in the technical analysis. Just to say that bulls remain firmly in play and the upside firmly in focus as previous 2 days break above 15,000 psychological barrier, and now sees break above 15,100 that sees more potential towards the upside. From the other side, euro benefited against Japanese yen. We have a question about euro yen, and they posted the fresh high at this morning at 131.92. We are just ahead of 132 level. That I think we should open the monthly chart. Exactly, 132 level marks exactly 50% retracement of the longer term descent from 169.95 high of July 2008 down to 194.10 low of July 2012, and this is now the price is approaching this level and seeing a potential for a break here. That will open way for a stronger recovery as a part of the recovery rally from 94.10, and we'll be looking for levels at approximately 134.50 zone seen as the next upside the target. So on the downside, good support and strong support is seen on the previous tops at approximately 130.40. Previous highs at 131.011 and 130.65 offer initial supports ahead of another significant 4 times tested the top at 130.40. That should contain any stronger dips in order to keep the bullish structure in play. Indian rupee we don't have, so I don't have really the analysis. I'm not sure about Kiwi versus the Swiss. Let me just take a look if we have it. I don't think so. Ah, there it is. Okay. Let's take a quick look at lower time frames show the positive tone as let's just take a look. Pardon. Hourly tone is positive as the pair advances from 78.28 low posted on 8th of May 2013, approaching now the recent peaks and barrier at 79.80, break of which to open next barrier at approximately 80 zone. This is acting as a strong resistance. Positive tone as set dominates on the hourlies, while 4-hour indicators also maintain remain in the positive territory and see potential for further extension. Oh, I do apologize. We didn't put the chart. Wow. Oh, it's here. Okay. On the 4-hour chart, it says still the situation is still fragile as the price remains actually is attempting now to break the trend line resistance. We're talking about bear trend line drawn of a peak of 80.80 posted on 25th of April. Success here is seen opening a next significant resistance at 80.04 peak of 6th of May 2013, and also we have the Fibonacci barrier 79.84 just ahead of this 61.8%. We have to see the clear break above the trend line resistance and above 80.00 to signal double bottom at levels 78.34 and 78.28 in order to resume recovery and open next stronger resistances and previous double top at 80.80 and 80.78 highs of 11th of April and 25th of April 2013. On the daily, uptrend is still in play, though the choppy trading scene under the 80.80 double top is still shows no direction. We are currently within the range that is defined on 80.80 on the upside and the 77 78 approximately on the downside, with the tone being slightly skewed towards the upside, but still a lot of work seen. We need to see the break above 80.00 in order to shift the focus higher and look for a retest of peaks at double top at 80.80. I think we exhausted the questions for today, and if there is no other questions, then I would like to commence the today's session. Keep an eye on the markets as it's Friday, it's end of the week, and the continuation of stronger movements seen yesterday is quite likely, so we can expect a lot of action in the markets today. We're back on next time is Monday at our regular time at 7 o'clock GMT, 10 o'clock local Cyprus time, Monday 13th of May. We expect to see you again with us. Until then, I wish you a nice Friday, successful trading, of course, and a good and relaxing weekend to be ready for the next week's action. Good luck.